Now, if you recall, when we did under our audit programs document 10.20, I mentioned at the time that where you had a component that had an immaterial balance, such as your investment income, say 16 Rand, you have the option to go and say, no, we're not going to audit this component. It's not an applicable component for my audit. As we mentioned then, have come back and said, well, if you do that, please make sure that you insert that value on your overs and unders. Okay, so that's just going to go and cover you in case that balance is 100% overstated. So you say there's 16 Rand investment income, but there's actually zero. It's a potential audit difference. However, from a completeness point of view, and we mentioned at the time, investment income of 16 Rand, yeah, not material, I'm not going to audit, but what if it had to be 16 million Rand because they have not gone and recognized dividends that they've received? Okay, so there's an attempt to defraud the company. They keep the dividends for themselves. Okay, what you would need to do in that case, and that is why we have this overall completeness working paper. The overall completeness working paper literally just goes through what you've documented in 10.20 and lists all the components that you've either said, no, we're not auditing, or that you've left blank. So you'll see that there are additional class of transaction items here that maybe have absolutely nothing to do with your audit. We're just making sure that every other component that is possible is brought through. Okay, and now we give you the option to say, do I want to include a completeness test on each of these components? Investment income, in this case, I would definitely say yes, because we had 16 Rand, but something like other income, maybe, even if it was zero, we want to go and consider. Intangible assets, we can say is no, and the amortization, because we don't have them. Fair value adjustments, PPE, finance costs, maybe there was a bit of bank charges and they've allocated it to interest income, or even interest on overdraft. Tax expense, oh gosh, we should probably have audited that, but if you did get here, just go and make sure that there's not a tax exposure, and therefore you should have had a tax expense that maybe you don't have. There are no biological assets, so I can ignore those items, all of these items. So you're just going through basically and confirming whether or not there are any sections that you need to go and maybe do a procedure on completeness. Provisions maybe is a nice one. Are there provisions that should have been made? Finance leases, no. I'm just going to say no to all the others. Once you've gone through these items, the other question that it is asking you to confirm is, how much assurance do I want to get over the completeness of investment income? We could have auto-populated, but we felt it was maybe a little bit dangerous to auto-populate that. So we're just wanting you to go and say how much assurance. More than likely you can say low, unless there are reasons for you to believe that this particular client or the particular balance has got a higher risk. Maybe we go and look at tax expense and we're going to rather say, listen, I want a higher assurance on the tax expense. If you leave it blank, we're going to assume significant. That's the only thing when you get to the next sheet that we're going to stipulate. So now I've decided what I want to audit for completeness, and I go to my 70.20, which is the next sheet, and this now gives me the opportunity for each of these components to go and describe the procedure that I will perform in order to verify the completeness of this balance. Investment income, go and verify investment statements, or if you've got investments in the entity, go and look at press releases for the investments and find out whether any dividends were declared for the year. If it's interest income, go and have a look at your bank confirmation, if your bank actually puts the interest on, which I know sometimes is a bit of a challenge. Or it could even be just getting the IT3B. If you've got a February year end, that's nice and easy. You can go and see if there's interest, or scrutinize the bank statements. So whatever the case is, go and document a procedure to confirm completeness of the investment income. Because what we're saying is the 16 Rand, even if it's 100% overstated, it's not material. 16 Rand or zero, that's not a problem. We just want to cover ourselves that maybe the business has deliberately or accidentally gone and not recorded specific items. Finance costs, again, have a look at your bank confirmation. Other incomes, maybe scrutinize the bank statement for any unusual deposits that don't link directly to actual customers or your normal sales customers. Tax expense, reperform the tax calc of the client. So it's very unusual that you're going to have tax expense sitting here, because even if you have zero tax, I would say that that is qualitatively a material section that you would need to go and do the tax calc. But I'm hoping you're getting the background, or the idea here is that what we're trying to do is just give you the opportunity to cover yourself on completeness, so that if the query arises about could this balance have been materially misstated, then you have at least done a completeness test. You haven't had to go and do 10 or 15 procedures on investment income. You're doing 1 or 2. We're just giving you the option of 1 or 2 procedures here. Go and put the reference in, so in other words, hyperlink to the working paper, any comments, and then we go and specify, do we consider the component complete? So it's a little bit of a conclusion. On the audit programs for each cycle, you also had a conclusion, so we're just wanting to put a little bit of a conclusion onto this audit program so that you know that you've covered the work that you needed to. Okay.